Welcome back to Reimagine 2020. I'm Yonah Hochhauser, and today I am glad to be joined by Dotun Rominiyi, Blockchain and Innovation Strategy at London Stock Exchange Group. You guys are a group now. Dotun, thank you so much for joining me.
Thank you for having me.
Now, first, you want to give us a little background about who you are and how you got into blockchain?
Sure. So I've spent my career as a technologist. Started in the video game sector, funnily enough, building games for a living. Blockchain was something that I kind of discovered once I transitioned into the financial service sector. And so I was working for a large-scale investment bank, learned about Bitcoin. That led me on to learning all about Ethereum and then kind of blockchain in general. It was from there pretty much that I launched into my own startup. So spent 3.5 years across 2 separate projects working on kind of commercial blockchain ventures, which eventually, off the back of that, led me into my current role, leading or co-steering blockchain and emerging technology and innovation strategy at the LSEG group. So yeah.
Mm-hmm. Well, when one thinks, well, someone from my world, from the blockchain world, thinks about the traditional stock exchanges, London Stock Exchange, it seems kind of like the other side, the other team. Especially when we're looking at crypto exchanges, there's the traditional exchanges and there's crypto exchanges. But what is the LSEG working on in terms of blockchain? Do you guys view it as a competitor or as a technology that could actually improve your own business?
Yes, that's a good question. I mean, so we spent a long time looking at this tech. I think as a group, over the past maybe 4 years, we've been involved in blockchain technology in various guises. Initially, a lot of the work we did was purely focused on research and development. And we actually were one of the earliest contributors to the Hyperledger project as well, actually. So we did a lot of work on Fabric. Coming away from that, I think we started to shift our focus and really look at commercial use cases of the technology. I think as we were seeing the technology evolve and mature in the ecosystem, we started to really explore to see, where can we spot potential opportunities to leverage this to really create and yield value. And there were a couple of areas looking at kind of, digital automation of workflows across multiple organizations or organizational silos. But really, what kind of really jumped out to us was the area of digital assets specifically. And I know generally, when we talk about digital assets, we can kind of split them into 2 separate groups, right? So you've got your crypto assets on one side, which is your Bitcoins, your Ethereums, all of these assets that are mostly unregulated, largely not backed by physical assets in any form, and certainly not securities. And then on the other side, you have essentially what we would see as digital representations of your more traditional financial instruments. And this is really where we focused our attention. So, being an organization that is predominantly focused on providing financial markets infrastructure to financial markets such as equities and fixed income, we really started to explore some of the opportunities, but also some of the technical challenges and some of the market, let's say, infrastructure deficiencies that exist around this kind of concept of digital securities. And so we started to really look at some of the potential areas where we could really add value. So maybe to just give an example, one of the kind of more strategic projects that we've been focusing on as of today, actually as of last year, is a project around UK equities. So looking at building a model to facilitate post-trade settlement of these assets. Now what that really means is, when you trade an asset on an exchange, whether that's digital or otherwise, the assets don't actually change hands until settlement occurs. And settlement typically in today's world can occur, let's say, 2 days later. And that gives the brokers on one side and the brokers on the other side of the trade enough time to make sure the cash is in the settlement account, the securities are in the correct security account, such that then settlement can take place. Settlement is normally managed by a central securities depository, which is an authorized organization, managed and regulated in the ecosystem. And similarly with digital securities, you still need that same facility because the regulation essentially mandates it for any listed security. It needs to be settled by an authorized entity. So essentially, a lot of the work that we've done is looking at, what are the regulatory frameworks that exist today? How are they structured? And how can we marry this modern, innovative technology with the structures of compliance regimes and regulations and obligations that are required in order for financial markets to function, and just sort of bringing those together. And we've done so within the context of the Financial Conduct Authority's Innovation Sandbox. So we entered their sandbox in cohort 4 last year, and since then we've been working on developing and building up that solution. And we have a number of other projects and initiatives that we're focused on, but all kind of similarly focused on predominantly digital assets as a theme.
And in that, for the equity trades, that example, would blockchain essentially remove that middle party that's necessary, because historically you kind of needed that third party, that trusted third party to facilitate the deal? Would blockchain essentially get rid of that middleman?
And that's a really good question, and it's really the question you're asking is the question of disintermediation, right? And it's a very prevalent theme when we start talking about decentralization and some of the value that it does provide. And from a trust perspective, and in a general sense, in a conceptual sense, yes, it does. The challenge, however, is when you look at, again, the financial markets as they exist today, we still have the same rules and regulations, that were written in an age where there wasn't such a technology that could obviate the need for trusted intermediaries, and therefore the rules mandate the need or the requirement of them. And so, since we can't work around the regulation, we have to work with the regulation. But what we do is we enable these entities to be able to engage and participate in these activities within a entirely automated or entirely electronic workflow on DLT. So essentially what you're doing is you're taking the CSD and you're bringing the CSD onto the ledger, allowing them to fulfill their role, but in some ways, something of a kind of hands-off capacity, but not necessarily hands-off, but in a much more streamlined and efficient way than you see today. That does provide value within the context of post-trade, but what it really does is it kind of lays the foundation and of what we see as essentially being the kind of the future of financial markets infrastructure. So the future of securities, essentially, which is a landscape where you have assets that are entirely digitized from inception, from the point of issuance all the way through their life cycle. And in providing that baseline infrastructure, as we all know, DLTs are very good for developing technology-led ecosystems where different participants can layer different services and solutions onto the same DLT infrastructure in the form of smart contracts, and they can all interact with each other. So what it enables is you can have these assets that exist on this ledger, and then innovators, fintechs, other organizations can come and bring their products and bring their services to provide value to clients across the entire ecosystem, but all leveraging the same common infrastructure. That saves cost across the broader market. When you look at some of the infrastructure setups for a lot of the large investment banks and a lot of institutions in terms of middle office and back office technologies, a lot of that can disappear. And so there's a lot of efficiency that can be built across the ecosystem as a whole. It will take a long time in terms of adoption to get there, but there is a lot of value. But initially, you just need to lay that foundational piece.
And I kind of like how you're focusing and saying the word infrastructure, because I think that hits it on the head. And I think a lot of people, when they hear the blockchain and they try to use it as a buzzword, they're kind of missing the point. And I think here, especially in your use cases, it really is an infrastructure. So it's a pipeline. And so, especially when you're looking at stock exchanges, I mean, you go back 20, maybe at this point, 30 years, and the trades were executed by people in the pit, tossing pieces of paper. And you look back and it seems so outdated, so slow, inefficient, outdated. I mean, it's ridiculous. And then, today it's all digitized. It's all digital. There are trades happening in microseconds. And, regulators did catch up to that new technology and did regulate the new reality of the way the exchanges work. So when we're looking now at this new technology, this new innovation, that's DLT, that's blockchain, one, what are we going to look back at in another 20 years and look at it like we're looking at today, those in the pit, the traders throwing their trades on pieces of paper?
I think that's a really interesting question. And it's a difficult one to answer because I think, 20 years is a long time. And specifically when you're talking about technology, right? 20 years ago, I don't think everyone had access to the internet. So there's a long way to go there. But I think, that there's a lot of, when you look at what's happening today, when you look at the general technology trends, you see, in the financial service sector and institutional space, there's a lot of investment, a lot of interest in looking at kind of digital securities and use cases around that. in leveraging DLT and blockchain technology to solve for some of the operational deficiencies in existing financial markets activities, right? And some of that is secondary in terms of the secondary market kind of, trading workflows, but some of that is also primary markets, right? So around issuance and initial investment. Some of it is private markets in terms of how they're operating. So we look at, large private investments in some of these big companies, and there's a lot of activity there. There's a lot of money flowing through the private markets today compared to even how that was, 5, 6, 7 years ago. So I think, that there's a lot of opportunity there for technology, just technology and digital transformation in general, but even more so when you have this, as I said, this baseline infrastructure that can facilitate a digital representation of a security. And we're seeing lots of interesting projects, everything from, the digitization of real estate to projects looking to digitize, luxury cars to collector's art. There's lots of interesting, opportunities, right, to start to explore how you can expand, let's say even the definitions of securities, right, in terms of like securitized assets, leveraging the efficiencies of these new technologies. But even looking on the other side, as you call it, looking at the crypto space, when we look at the growth and development of DeFi and what's happening there, providing a more open, more inclusive ecosystem for financial service provision, I think what you'll start to see over time through increasing regulation in that space, increasing maturity, and an increased focus on risk management and risk mitigation for investors and for clients, you'll start to see a convergence of both sides. I think you'll start to see, the DeFi solutions and the crypto solutions starting to come together with the financial market solutions and the kind of old world. And I think once that happens, then you'll see a real proliferation of this technology and the benefits that it can yield.
Well, I mean, we're talking about the coming together of the two sides, the crypto exchanges and the traditional exchanges. While I would love to see that, I do think we're a little bit off from that. But
sure.
Until then, I mean, I'm sure it will happen. This is just an inevitability. But until that happens, are you guys looking at the crypto exchanges and saying, hey, maybe it's unregulated right now, maybe this isn't mature enough for us right now, but there's underlying technology or there's lessons and tools that they are using that we could actually take and use for our own traditional exchange?
That's a good question. So I think there's lessons there, right? When you look at, their ability to scale and to directly provide services to, let's say, retail investors, which is something that traditionally us as exchanges have never really done. A lot of that is driven by, regulation and market structure. But a lot of it's just, it's just the nature of our businesses, right? We generally face off to large regulated firms, and we're not necessarily set up operationally to deal with, hundreds or thousands or millions of customers like some of these exchanges are. So I think there's lessons there just in terms of, are there opportunities for us as traditional businesses to explore ways in which we can provide more direct value to retail investors and end consumers. And that's an area that is fairly open to exploration. And then I think on the other side, when you look at kind of the trading model, right, where for many of these crypto exchanges, the assets are uncleared and they're settled in real time. And the way they do that essentially is by having a non-credit based trading model, where essentially cash is in the account, assets are in the account, and then you trade off only what you've got. And that works really well in the context of retail, where essentially you're not extending leverage because there's probably a lot more risk than you'd have, extending that to a highly regulated, highly liquid financial institution. But I think even within that, there's some interesting qualities that fall out of that model that I think are interesting for exploration within the financial service sphere as well. Can we see T0 settlement markets that leverage this kind of pre-funded trading model? I think that's something that's very interesting to explore, and we're looking at that. I know the Germans are looking at that. I know the Swiss are looking at that. There are lots of traditional players that are really exploring the space in anger and testing some of these assumptions and hypotheses.
This is the first time I've ever heard the traditional vehicle being described as more risky than the crypto vehicle. So really interesting. I guess the appetite for risk in the regulated markets is probably better, because you do know that your risk is a financial one and not an infrastructure one. As in when you're dealing with regulated institutions, that the deal won't fall through because the system failed, but rather, just your bet didn't pay off. So I guess that's an interesting perspective there, and a point I never really thought about. So that's interesting there. But on that same idea that this technology is so new and it is constantly innovating and developing. So when you guys are actually working with DLT and blockchain solutions, is it mature enough and at the point where you guys are actually putting not real resources, but really putting an entire set of assets onto it, or are you still in the proof of concept stage, the sandbox stage? Is it in production, or is it in proof of concept?
So we're not yet in production, but that is certainly the goal. We spent a long time, us and as well as many other financial institutions, doing some very early stage exploration of the technology. So lots of POCs, lots of proof of values. But I think we've moved beyond that now. And I think, looking, broadly at the technology, there are technologies out there that are mature, that are battle tested, and that are of a high enough grades, in terms of just their ability to facilitate the needs of, enterprise customers like us, around resiliency, around cybersecurity, around, networking configurability, around consensus, modularity. There are lots of there are some fairly mature technologies there that are worth investing in, and so we are doing exactly that, right? So we're looking to build solutions that we can take to market, that we can spin up, stand up, that we can push assets onto, and hopefully scale, and ideally building them to scale from the off, right? So when you look at we trade trillions of pounds worth of equities on an annual basis, right? Across our markets. Can we scale up infrastructure that can facilitate that, a similar scale of volume and throughput? And that's really the target for us. So, we need to ensure that the technology can deliver within that. And so we've done a lot of work around technical evaluation to ensure that we're choosing the right technology that has the facility for that. So yeah.
Mm-hmm. And when you're doing all this research and you're evaluating and you find a technology that you think would be the perfect use case for LSEG, you're excited, you go take it to your boss, or you first find it, right? And you're about to take it to your boss. Which is going to be the hardest sell for you? Is it convincing your boss that this new solution is trustworthy and good enough and better than the old solution? Is it then going to the partner equities marketplace and partners and convincing them to also use it, because it's useless if it's just you guys? You have to get the other parties also. Or is the hardest sell going then to the regulators and saying, hey, I got this awesome technology. My boss signed off on it. The equities market signed off on it. But are you guys going to sign off on it?
So yeah, I mean, it's a very good question, and it's one that as a small cog in a large beast, you always have to grapple with. I think we're quite fortunate in the sense that we've had a lot of support and buy-in from fairly high up the chain for a long time. And actually, much of the work we do is working directly with senior leaders to help them steer and shape, their technology strategy, and keeping an eye on what's going on in the DLT space and what opportunities there are. And I think the work that we're doing at the moment, strategically, I think falls out of that and very much aligns with those strategies. So I think being in that position has put us in the right stead, should I say, with kind of the overall direction of travel in terms of where we want to go as an organization. And I think that in itself has really helped kind of push inertia in terms of getting investment behind it, getting focus behind it. And I think as we scale and as we start to build a solution and it starts to materialize, and we're in a position where we can start, going further abroad and having, more conversations with others in the ecosystem. We've already started having conversations that have been very, positive, but we can continue that, and hopefully, we can see some real growth and traction there.
And how about the regulation, on the regulation side? Is it a case of you guys find the solution, you build the proof of concept, you make it work, you get approval from your boss, and then you go to the regulators and they then try to write new regulation for it? Or is the regulation set and you guys try to build stuff that will fit into the existing regulation?
So I think, and again, from a regulatory standpoint, I think we're quite fortunate in the sense that we've been able to leverage the financial service conduct authorities innovation sandbox as a means to essentially bring us and the FCA together around the solution that we're developing, to bring them in early, to give them insights into what we're trying to do, how we're trying to go about it, why we're trying to do this. And that helps them to inform us of, the specific requirements and obligations that maybe we're not aware of, bearing in mind that, we have fairly sizable internal compliance and regulatory teams who we've already gone through the weeds, and a lot of this stuff on in terms of ironing out, what are the ways in which we can ensure that this technology is compliant. So we're already walking in with a degree of confidence, but actually that process of working through this with the FCA will hopefully give us even more confidence in terms of being able to deliver that. I think in terms of where we are, we don't anticipate or expect to see the need for regulatory change off the back of this solution, but we do expect that this may inform or steer to some extent the way in which regulation may change and evolve to further enable more efficiencies, more opportunities for growth and development off the back of solutions that have been proven to and demonstrate success within the real world. So I think once we're able to deliver something, stand it up, get it working, get the clients onboarded, and actually see it generating value, that gives confidence to regulators to say, yes, we can agree that this may be a technology for the future, and therefore how can we remove other obstacles to innovation as this technology grows and develops. So I think that's really the focus on both sides.
And when I asked you before, what lessons you could take from the crypto exchanges, you mentioned that they do a really good job with retail investment and large scale amount of users, because that's not your business model. You guys deal with these big institutions that are very, very large accounts, but less of them. And that's been the traditional business model for financial institutions for a long, long time. They don't raise capital from the everyday person. They go and they do these big deals. But I think one of the big promises of blockchain and of tokenizing digital assets, because that's the field that you guys are focusing on. You're less focused on the cryptocurrencies, but more the digitalization of digital assets and tokens. One of the biggest promises, I think, of that field and that technology is that for the first time, you can take, let's say, a massive real estate deal, a massive property that's worth $1 billion. And historically, you'd have to go and, if you want to finance the deal, you'd find one institution or a couple of players. They'd sign on a contract, 4 of them, and that's it. And you guys would manage that. But with blockchain and DLT, it now opens the doors for a democratization of that deal, where you can now tokenize that $1 billion deal, and you can find 1 million people each to give. Can't do math. I think it's $1,000. Each person gives $1,000 worth of that token. And now all of a sudden you just finance that deal, a much smaller amount of each person, but a lot more people. And so this now makes it possible and also economical to fund big time deals in this more spread out mass way. So do you think that although up until now, the available technology to you guys has kind of dictated your way of working merely through big time institutions, do you think this has the ability to open the markets for everyone and potentially, even big institutions like LSEG will now start, dealing with, hey, we don't care what size you are. We care about, the deal as a whole, because we could accommodate now large scale amounts of investors.
So I think it's an interesting question. I think some of this though comes, it kind of falls into 2 areas of consideration, right? So one being economics, and the economics of like wholesale transactions versus, granular retail transactions. And I think generally, we exist in a wholesale financial market. I don't anticipate that's going to change. And I don't necessarily believe that in democratizing, access to that, is going to yield value. I think if anything, there is a lot of inherent complexity in managing relationships with, let's say, 1 million investors, or even 1,000 investors, right, compared to like 12. So I think, given the realities of that, there are instances where it makes sense to have a smaller number of larger investors, where just from a relationship management perspective, it is easier for you as an issuer to be able to kind of manage and facilitate that. And whilst I appreciate technology can improve some of those some of those areas and some of those and solve for some of those problems. I do think you're always going to see this split, right? Of like, hey, we deal with the retail side, we provide broad access, and there will be intermediaries and service providers who are able to do that. And then on the other side, they will sell on, large ticket, finance or assets to other institutions who will provide hedging opportunities, insurance opportunities, trading opportunities, etc. And so I think you'll always see that split just economically. I think it just makes sense. I think the other consideration, and is one, that regulators would put a keen focus on as well, is just market stability, financial market stability, right? And I think ultimately there's always a challenge when you're trying to provide fair, when you're trying to sustain fair and orderly markets around information symmetry. How do you maintain information symmetry? How do you ensure that everyone has access to the same amount of information or the same level of information to be able to make informed decisions around their investments? In a regulated financial market with institutional players or professional investors, most of whom are deeply informed and have fairly large teams who can essentially do that work for them, that's not a difficult task to solve. In a retail context, it's very, very challenging, right? So I think, given that, you will always have, regulatory-led protections around access, providing access to retail investors, because, whilst it may be beneficial for an issuer to say, hey, I can broaden my demand by basically farming off my assets or my issue to, a larger pool of investors. Do they really know what they're buying? Are they buying for the right reasons? What if I'm a snake oil, salesman? Is the market structure, enabling me? I mean, we saw this in 2017, right, with the whole ICO boom and bust, and it was the lack of focus on investor risk that essentially caused the bust, right? Where there's all this excitement, we've created tools and technologies that really empower and enable issuers to raise capital, but we've not solved the issues for the other side. We've not solved the risk aspect. And this risk is something that, as a traditional financial market, we deal with very, very well, but not necessarily in a retail context. Retail banks do that very, very well, right? But that's their business. So.
And I mean, that's, I think you hit the nail on the head where in 2017, 2018, they did solve for raising the capital problem, but they didn't solve for the risk. And I think the big reason that there was so much risk is that you were investing and you weren't getting equity. When you invest in ICO, you were giving them money on the promise that maybe there would be a use case for a token. I mean, you look back, it seems ridiculous. You weren't buying equity, you weren't getting anything, really. And so now, right now, a lot of people are equating the hot DeFi section to the 2017, 2018 bubble. And while I do think they have similarities in hype, I disagree in the kind of emptiness of value aspect, because with DeFi, there is value because there's collateral. You're not buying nothing. Every loan, every interest is over collateralized. So my question is now with DeFi, are you guys looking at DeFi and some of the incredible solutions that are there? I mean, obviously there's tremendous risk still. It's a very early technology. They're still working a lot of kinks out. But Absolutely. Are you guys looking at some of these unique technologies and solutions for your own to even not in the retail, because clearly you guys don't want to deal with retail, but even to your own big institutional players to kind of streamline the process, add better efficiencies for any loans or leverage, or I mean, there's a lot of solutions, but essentially right now DeFi is pretty much boiled down to lending and leveraging.
So I 100% agree with how you boil that down. I would completely echo those sentiments. Are we as an organization, as a group, looking at DeFi in anger? Not so much, in the sense that, I mean, we as a business, leverage and liquidity provision isn't necessarily, what we do. We provide markets, we provide the rails for bringing, investors together to trade and issuers. But I think as a market generally, when you look at investment banks, etc., I think there's probably a lot of interest there when you look at just some of the models in which they are exploring and experimenting in terms of being able to automate and systemize some of these commercial structures, some of these risk structures, some of these lending structures. I think there's some really interesting innovations going on there. But I think, as you said, it is very nascent. There are a lot of kinks that need to be worked out. There's a lot of risk still, inherent in some of those models, and I think it will take some proving. But I think ultimately, over time, as it develops and matures, there will be some fairly well-tested models that are attractive, and I think you'll start to see those permeate the kind of broader ecosystem more generally, right? In terms of being able to borrow some of those ideas and explore leveraging them within the kind of, let's say, traditional context. And this is why I said we'll start to see this convergence of the kind of the new world DeFi, and some of the technologies they've developed, some of the models they've proven, and it may not necessarily be the same asset classes, but some of that may be equally relevant to digital securities as it is to digital commodities or digital tokens in some form. So
I mean, one of the DeFi use cases that just seems kind of, at least to me, obvious that it will eventually reach the mainstream and possibly put you guys out of business. I don't know. You could let me know. Is the automated market making? I mean, if you guys are right now you guys make markets, but why are you needed? I mean, if the technology does advance to the point where it's complex enough that could handle all types of assets securely, transparently, and efficiently, isn't that use case the automated market making? And you see it with Uniswap, but these are kind of very basic. These can't handle what you guys do, but isn't that the skeleton of a system that could eventually replace traditional market makers like yourselves?
Well, so I mean, we don't market make our markets. We're by obligation, we're not in the position to. But we do, obviously, naturally, we have extensive relationships with market making firms who provide services across a broad array of our markets. I think there is a lot of value there. Even when you look at a lot of the market making firms that we engage with, a lot of them do already have fairly well systemized solutions, but and some of which are automated. I used to work for a market making firm, so and some of which are partially automated. I think there will be opportunities to explore fully automated solutions. I think given the complexities of some of the, let's say, professional trading strategies that are evident in financial markets, it would be very hard to have a one-size-fits-all solution, because you have to be able to vary playing defensively, offensively, to be able to predict certain patterns in trading behavior, to be able to offset risk in real time. There's a lot of complexity there, and again, traders are continuously evolving their own strategies. Market makers are continuously evolving their own strategies. It's an arms race, and a continuous arms race. And so I think it would be hard to expect that you could see a one solution to rule them all type approach. Maybe with ML, right? Maybe with machine learning and artificial intelligence, which we're seeing being deployed in anger today, right, in financial markets. But yeah, I think it will take time to see how that plays out. But I think in the retail context, when you look at some of the crypto exchanges and the fact that a lot of their flows are maybe just more straightforward, just in terms of the kind of motivators and the kind of behavioral dynamics of trading, then it's a little bit more predictable in terms of being able to provide, let's say, a fully automated and seamless automated MM solution, I would imagine.
Mm-hmm. Well, I mean, you mentioned AI and machine learning, which are also, cutting edge technologies that have the potential to really change the way our traditional infrastructures have been operating for of some hundreds of years.
Sure.
But listen, you're there. You're part of innovation strategy at LSEG. So on my end, from the world I come from, the blockchain world, we like to toot our own horn a lot. We like to think that we're going to change everything. Every use case is going to be blockchain. It's going to revolutionize everything. But you're a little bit on the outside. You're there. You're in the innovation strategy. So you tell me, how big is it really? I mean, how does blockchain compare to technologies like AI and machine learning in these financial institutions that are investing, you always want to innovate, you always want to get new technologies. How much resources is actually going towards blockchain relative to resources like AI and machine learning?
So I think AI and machine learning it certainly has a lot more investment, and I think that's a function of its broader utility across a wider array of market participants. And I say that from the context of every business has data, every business is generating data, and therefore every business can generate value from their data. And this is where there are lots of opportunities across the entire ecosystem, across every sector, nearly every sector, right? Where AI and ML can yield some real value. I think blockchain has its use cases of which you well know. I think when you look kind of long term and you play it out, I think blockchain has two core areas of kind of focus in terms of building up real entrenchment and solidifying its position as a technology. I think one is infrastructure, and I mean industrial infrastructure, enterprise infrastructure. So the kinds of projects that we're building, right, to underpin financial markets, to underpin trade finance, to underpin global supply chains. I think there's real value in seeing the development and the adoption of this technology to solve for some of those rigorous industrial problems that are not easily solved by centralized technology. In fact, are practically infeasibly solved, right? I think the other keen area of interest when you look at blockchain and DLT specifically, right, is more of the a global infrastructure, public infrastructure, public good. So when you look at what Ethereum's doing, when you look at what Bitcoin is doing, providing a network that anyone can connect to, that anyone can leverage, and I think you'll start to see interesting uses of this technology, even in your kind of your classical startup businesses, your classical centralized businesses, your Ubers, your Just Eats, your Facebooks and Twitters. I think you'll start to see small scale usages of this technology, specifically where there are elements that tapping into decentralized identities, tapping into trust-based models, decentralized privacy and access models. I think there's some interesting opportunities to be able to leverage this technology in a very, very broad array of use cases freely, but you need that kind of public infrastructure there. But I think that it will take a lot more time to really realize that, because there are a lot more dynamics and a lot more complexity in that model, right? So you have to deal with protocol tokens, and then as businesses, how do you engage with that? How do you deal with the privacy of it? How do you deal with legal liability and interacting with not an organization but a technology, right? I think there's lots of questions that still need to be answered there.
Mm-hmm. And when we're talking about a big institution like LSEG, are they, when they're looking at blockchain, is it public chains like Ethereum? Is it private chains like R3 Corda and Quorum or Hyperledger, permissionless, or does it really depend on the use case, and you guys are looking at all of them by you guys?
Yeah, so I mean, we've done analysis across all of them generally. I think we expect the most appropriate for some of the use cases we're looking to tackle would be permissioned chains and highly scalable infrastructure. So your R3 Cordas, your Hyperledger Fabrics as examples, but there are others. I think there is utility in interest in adopting public chain technologies like Ethereum, but maybe for some of the more fringe aspects of these models, right? So, a perfect example of this, we expect the future state to not be a single blockchain that underpins the entirety of the financial markets, right? We expect to see large blockchain deployments that are, spread across multiple jurisdictions, solving for specific markets, but are all or mostly interconnected, either through trusted bridges or through interoperable protocols. And so, with that, we see that there is value in having, bridging or interoperability to public chains, such that you can have assets that are issued in the primary markets or private markets on public chains that can move freely, that have a lot more flexibility, can innovate a lot more quickly. And where those assets need to move into safe, controlled private infrastructure, where when an asset is listed on a public market, where it needs to be essentially dematerialized, i.e. effectively immobilized at a CSD, then it makes sense for that asset to then migrate across to that private network. So I think these are the types of models that we're kind of looking at, and these are the types of ways in which we see kind of interplay between the public chain and the private chain. But we don't see, what we don't see is the kind of scale of, trillion dollar settlement infrastructure being built on Ethereum, on public chain Ethereum. It's just impractical.
So right now, if we're looking at private chains, what's the aspect of the technology that's holding back the adoption? Is it the inability to scale properly? Is it the fear of it's not secure enough? Is it just they haven't really found the perfect use case, or they're not sure how to implement it yet for that use case? Or is it the regulation? What's stopping it right now? Because you mentioned there's nothing really in production on a large scale for institutions. What is that aspect of the private chain right now, technology that's holding back?
So I think there's three main areas, I think all of which you pretty much touched on. So obviously scalability being one. Not all solutions are robust enough or have built the level of maturity necessary to scale to the extent that's required to solve for some of these use cases. I think number two is one of commercials. I think not every project that is kicking off or has kicked off has a firm, a full picture of how the commercials line up. But I think the challenge when you're trying to deliver a blockchain solution is you can't just think about your business, right? It's not a linear business model. And so with that, you can't look at, we are a company, we're providing a service to our customers, and that's it. What value do we provide? You have to look at every participant that you expect to see coming onto this network. What are their commercial interests? How do you solve for and provide a value proposition to them? Who's running a node? What is the motivating factor or the incentive for doing so? And so there's a lot there that you need to grapple with. And I know, there's still exploration around, potentially bringing on protocol tokens as a means for that. But it is very esoteric. It's not something that traditional businesses understand how to engage with. I mean, if you go to a large scale enterprise business and say, hey, if you accept this token that the system will generate, you can then sell it on an exchange and it will yield value. Well, they'll say, how do we link this up operationally with our treasury department and have a seamless workflow such that they can manage and govern that process? It adds a layer of complication to their kind of internal operations as a business and how that's modeled. It is so disjointed, it's so far removed from that. So I think it's still very early to explore some of these ideas, and so I think there's a lot there that still needs to be worked through. And then I think the final point is as you mentioned, regulation. I think not that regulation always necessarily creates a barrier, but I think the lack of clarity broadly or universally across the ecosystem around the regulatory status of conducting certain activities or building certain solutions makes it very hard for companies to innovate. Because if you're not well positioned enough, if you don't have that expertise in house, it's very difficult to understand, what hoops you need to jump through, what problems you actually need to solve, and how you go about that in a way that will be compliant. And we see this all the time. We engage with lots of fintechs and lots of startups, and they come with solutions, and they may be great solutions, but as soon as you look at it, already that this isn't compliant, right, with the regulations. Clients will never be able to adopt this because they can't use it, because the regulation is an inhibitor to that because of the way in which it's been designed. So these are some of the obstacles and challenges, I would say.
I mean, it does seem like if your hands full, that does seem like a lot to overcome. But I mean, listen, we're like at the beginning of the internet. This is early on, and you're really forging the path forward. But when we look at blockchains on enterprises, in the real world use cases in actual production, there seems to be here and there, for the most part, supply chain applications just because of how easily it just fits in with the use case, and it's not that complex. It's kind of perfectly fitted for blockchain. So that does seem so far to be the main production use cases. But you mentioned there's a lot standing in the way of actually seeing it in production in the financial institution systems because of the roadblocks you just mentioned. But how far are we from actually seeing it, to the point that it's no longer in the innovation segment of LSEG, but rather in the production, in just the regular operations, where that's just the infrastructure of what you guys do business on?
Yeah, it's a great question. I mean, so, and I'm just looking outside of the financial sphere as well. I'm aware of a number of projects that are, have been industrialized, right, and are in production, running in the real world, solving real problems. And they are, as you say, supply chain tracking, are big ones. There's a couple. Trade financing is another space where there's some real traction there. And there are, a couple in the financial markets sector as well, in specific markets. I think, it's going to take time to see, that transition from, as you say, new and innovative technology to it's just a part of our technology repertoire underpinning, the operations of our business. No different to our SQL databases and our, Kafka engines, and our cloud services. I suspect within the next kind of, 2 to 3 years, you'll start to see, the realization of that, more broadly, and in terms of it being a mainstream technology. But yeah, again, it takes time, right? Because you're trying to solve a larger problem than you're trying to solve if you're building a centralized solution, where it's really you facing off to a certain client demographic. Whereas with this solution, it's about convening all the different participants, and sometimes to yield the value of the solution, you need all of those participants on the network as well, right? So there's a lot of work to do, not just in building the technology, but in building the business case and then executing that. How do you define and build your go-to-market strategy? And that can be sometimes even more difficult than actually building the tech.
And now this is such a new technology that's not really so clearly defined. I mean, so far it seems to be supply chain, but it's not so clearly defined, when it's mature, how it'll be used. It could be a totally different animal. If you look at early days of the internet, no one would have thought that the use cases would be mostly, videos on YouTube and videos at all high, streaming movies to your house. So these technologies, sometimes what we think they might be used for early on is completely different to the actual mature use cases that some genius in a garage thought of. So right now, I've been speaking to a lot of projects, small and big, some people in their garage and also teams like yours that are an innovation team as part of a big organization. So there's a constant talk in the blockchain world about the mythical killer DApp. The decentralized app that's going to be so incredible. It's going to be its uses are going to just blow traditional uses out of the water, that it will force mass adoption to this new technology. And so far we haven't seen that. So far, the killer DApp has been price speculation, apparently, essentially, with the Bitcoin skying up, and that's where your mother and father heard of Bitcoin is the skyrocketing price, and that's price speculation. That's not really a killer DApp. That's just a buzz that people are trying to get rich quick. But my question is this: is that everyone's trying to innovate and find the use case for their business internally. But what is the likelihood of instead of the solution that you guys are looking for coming from within you guys or an enterprise solution, it actually being some small team that developed a killer DApp that is so revolutionary that it kind of forces everyone to use it, not just banks that deal with retail, but you guys who also deal with institutions, and essentially it will kind of force the game to change. Is that a possibility, or is that a complete myth? Totally that we're just harping upon and dreaming about to make ourselves feel better about our technology that has so much potential but hasn't really changed the world like we thought it would.
So I think that's a really good question. And I think a lot of it is, to answer it, it really depends on kind of your perspective, right? And how you see blockchain and DLT, and how do you see, decentralized applications. I think for me, I tend to equate blockchain and distributed ledger technology to this in the same way that I look at kind of TCP/IP, right, as a tech. It is, as we mentioned earlier in the conversation, it's infrastructure. And I think what you will see is a long period of industries and specific sectors laying the foundations of this infrastructure. But I think once you get past that, it really does start to then open the door for innovation. And I think this is really, it is a function of, the innovation of smart contracts. And I think programmable logic that can be deployed dynamically on chain, executed dynamically on chain, and is fully interoperable with other, independently deployed technologies and solutions. And that unique way in which you can build an ecosystem organically of these dApps that can interplay together, I think is very, very unique to blockchain technology. And I think these are the areas in which you will start to see real growth and development. And eventually you'll start to see these kind of killer dApps emerge. But I think there are lots of problems that need to be solved before we get there. So I think having the underlying infrastructure scaled and mature in specific domains, in this industrial domains, but also even, just purely on the technology side, when you look at the kind of, the public chain technologies, you still need to solve for scalability in order to facilitate that, right? You couldn't run, Uber or Airbnb on Ethereum today. You would bring the entire network to its knees. You couldn't even provide digital asset trading facilities for a single game the size of Fortnite on Ethereum. You would bring it to its knees. Even a quarter of their user base, you bring the game to its knees, right? So I think, looking at that, looking at the size of some of these markets, looking at the scale of transaction processing that a lot of these technologies that underpin a lot of these markets have, there is a long way to go for blockchain to get to that level of scale, but it will get there. And I think once it does, then that opens the door to seeing the realization of some of these, as you say, killer dApp, unicorns that may then take off and really change the game in terms of how we envisage, what the possibilities and the potential of this technology could be. I think the challenge that we saw over the last, let me say, 4 years was something of a distraction around kind of ICOs that kind of opened the door to, hey, we can leverage this as an interesting way to raise money. And that became the focus, and it became all consuming. And I think even the DeFi is nothing more than an evolution of that, right? And it's building products and services to facilitate the mechanics of digital asset issuance and trading. But I think once we move beyond that, once we see assets that represent core utility or dApps that don't even have assets associated with them, that are really solving workflow and interaction problems for a specific use case, I think there's lots of opportunity there for those killer dApps to emerge eventually.
You mentioned the scaling problem, and you don't need a Fortnite to bring Ethereum to its knees. It's already over congested and the gas prices are through the roof. So you don't quite need Fortnite. You just need the early adapters of crypto apparently, and to bring it to its knees. But we're running out of time soon. So last question before I let you go. We have a lot of students around the world in universities, watching this who are interested in blockchain. You run a blockchain innovation strategy, or work there at least at LSEG. What would you say to a student who's interested in blockchain and learning about it? What are big companies looking for in potential hires for their blockchain roles?
I mean, it depends on the role. If you're looking for a technology role, so building blockchain solutions, I think just having a solid background in tech, really get into the weeds and learn as many blockchain technologies as you can. Ethereum is a good starting point, but then obviously you want to kind of go further beyond that. I think if you're looking at the financial service space, you do want to look at some of the more kind of enterprise focused technologies. So look at Hyperledger Besu, look at R3 Corda, look at Hyperledger Fabric, and really start to understand how their models differ from the the Ethereum centric model, and how their technologies differ and what they do and what they don't do. And I think really focus on that. And I think even outside of that, just having a solid understanding of the technology, its utility. So what is it really useful for? What problems is it really solving? And how do you define a good DLT use case from a not so good DLT use case? And once you understand those parameters, once you're able to kind of really build a mental model of how to navigate that, then I think that's a great starting point to kind of build on that moving forward. But again, I think I would equally say build a strong understanding of all emerging technologies. I think there's a lot of opportunity there for DLT, but a lot of it is joined with IoT, for example, or RPA or ML or AI or other technologies too. So I think just continuously growing and learning and building an understanding of technologies in general is always a very, very good place to be.
Well, there's plenty of initials to learn, but Dotun, I appreciate your time. I'm sure you already gave that first push. Anyone who watched this, any students would for sure have gotten a little better understanding of this emerging technology because of you. So I want to thank you for your time and helping peel the veil back a little bit on how traditional financial service industries are utilizing blockchain to innovate. So Dotun, thank you so much for staying with us, and for all our viewers at home for Reimagine 2020. I'm Yonah Hochhauser. Thanks for watching.